Welcome back to my 25K Funding Talent Challenge. This is my journey. What's good, everybody? It's your boy Marcelino back with another episode. We are on episode 19 or 18, one of the two, 18, 19. I'm not too sure, but we're back. You guys probably thought I wasn't going to post this video, but we are back. Yesterday is Saturday morning. I'm about to go hit the gym. I didn't make the video yesterday because things just got a bit hectic and I got a bit tired later on in the day. So I was just like, I'm gonna do this thing tomorrow. So yeah, I did want to keep you guys up to date with the process. I'm not going to stop until I get funded, whether we get a retake, whether we get the verification. This day-to-day videos is gonna go on until I get the funding, guys. Until I get the funding, I'm gonna be here speaking to you guys on a daily basis about my trading. And when we do get the funding, I'm gonna do it once a week. So I'm gonna have to work hard so that I can stop doing these videos, okay? However, let's get into the video. Thursday, I mentioned I wasn't gonna trade. However, London session, I woke up early enough to actually get a trade. I took a GU, I think it was a buy, I'm not too sure, and we got stopped out. And that was the day when GBP was about to rally, and it really rallied actually. So I took the buy on GBP USD, got stopped out, and then I watched it fly, and I said, okay, I'm not gonna take another trade. Or I was talking the market for another trade, but I couldn't find an entry. So it was like, and I'm gonna get to that why I couldn't find an entry. So on that same day, Thursday, in London, after I got into GU, I moved to GJ because I saw GU was already flying, and obviously most times GJ lags after GU and then it continues. That's what I found to be. So GJ breaks above a key area in the market, which is a 4H key area. So now after that, I'm anticipating the next 4H key area to be tapped, and we break out. And I couldn't enter because I couldn't calculate my lot size quick enough. And so what I'm getting to in this video is, hopefully this weekend I'll buy something called magic keys, which really just helps you enter in the market faster because you don't have to calculate your risk size. I'm gonna do a separate video on this, and I did mention that I am gonna do a separate video on this, but I want to do the video when I have worked with magic keys for at least a week or two, and then I can actually explain to you guys how it works. But the hype around it seems very, very good. It seems to be that it's really a good like forex tool for day traders, because with JPY on Thursday, price broke out and it just continued to fly. And remember, I told you guys on Wednesday that a lot of times when GBP JPY and GBP USD, or mostly GBP JPY in London and New York, when it starts to break out and you can get a stop loss below that 15-minute candle breakout, you can more likely than not get a 1 to 3, 1 to 4, 1 to 5, because of how it's going to move. It's just going to continue, and you can get in and out within like 30 minutes to an hour, okay? So I couldn't get into that specific trade. But yeah, doing the thing. This I forgot to mention at the start of the video, your boy got a haircut game. So that's just a part of the reason why I didn't want to make a video yesterday. You know, boy was busy, their youngest busy. So yeah, guys, going into yesterday's trading, I took a L on GBP USD in the morning. It was a sell, and guess what happened after the sell? Price went down because I moved my stop loss to half. And then what I told myself is I'm gonna apply what I was speaking about on Wednesday to GBP USD, not actually checking GBP USD and forgetting that I mentioned that I'm not going to trade GBP USD in New York session. I wrote it down in one of my journals that I'm not going to be trading GBP USD in New York session. However, GBP USD has a clean breakout on the 30-minute and on the 15-minute. I enter and I place my stops above the 15M. So it's not the way I usually take a trade, where I'll enter on the low and then my stop will go above the wick, right? And I'll show you guys the trades in a minute. So what happened was I left the charts for like 30 minutes and I came back and my stops was it. And I did risk slightly a bit more than 0.25. I risked 0.4%. And what I forgot to mention is that I also traded on my phone on Thursday when I was out with my mother and my sister. So what happened was I actually gained a win with that theory of when price breaks above a key level, place your stop loss below the previous candle's wick and then just let it run. But I went in with a very, very low lot size of 0.25 because of like 0.25% because of me trading on the road. And I said, okay, if I lose, I lose. But let's test this theory because this is looking quite clean. I left this area, and this was GBP JPY. And so it does work. If you guys want to start looking at it for like a week or two, then you can start applying it. That's a free strategy right there. Within like high volume times in the market, just look for a breakout, and then you can buy on that breakout with your stop loss below the previous candle, and then you go for 1 to 2, 1 to 3, whatever you like, whatever you want to go for. Target areas where there's kind of traffic. So yeah, guys, 2 losses yesterday. I should be feeling down for some reason because we didn't achieve the goal, but I'm not. I think in my subconscious or whatever, because I planned on getting the retake, I really planned on not kind of not passing this thing, but just being in profit, which was a mistake. I am gonna speak on after this on Thursday. I'm gonna be uploading 2 videos. Whether I pass or not, I'm gonna be uploading 2 videos about like the mistakes that I made going into the verification or going into the retake, so that I can watch that video myself with you guys, and then we can make a plan around those things to pass the challenge or pass the verification. Okay, so one of those mistakes was that I didn't have a daily goal, in the sense that I didn't say I want to make 1% or 2% per day. Now my trading plans say that I want to make anything in between 20 to 40%. Now if I want to make 20% a month, that means I need to make at least 1% a day, and I wasn't focusing on that type of goals. What I was doing risk before reward. So I was more focused on the risk before the reward, you know what I mean? So a lot of days I took my 2 trades, I didn't lose anything, or I lost 0.25%, and I didn't gain anything too. So I didn't work towards that 1% goal, you know what I mean? And if I worked that 1% goal, then the 8% would have been very, very little to actually, like, if you put it like just into the bigger picture, like it would have been very little to achieve. So yeah, guys, that's one of the mistakes that I made, but I'll discuss those things in another video. I should be feeling down about where I am at, but for next week I want to speak about what we're gonna do for next week. What we're gonna do, I am up about 0.95%. I'm not too sure. I'll check now we'll check together when we go onto the funding talent portal, but we are up. What I'm gonna do is I'm gonna leverage that 200 and something dollars, and I'm gonna go a bit harder. I'm gonna constantly, whatever my balance is, I'm gonna be splitting it into 2 trades, right? So I'm gonna use that $200, split it into 2 trades, $100 and $100 for Monday. If we go up to, let's say, $300, I'm gonna split the $300 into 2 trades, and constantly until we hit $50 on the balance. If we up our $50, then I'm done trading, and I'm just gonna go for the retake, because the retake date, or the date that I can email them for a retake, is the 29th of this month. So yeah, that's the plan for next week. We're gonna go hard on not risk to reward, but just like actually focusing on the goal of achieving this thing. And if we can achieve 8% in a week, then that will be really, really good. Yeah, if we get that thing up to 1,000, I'm gonna be risking like $300 to $400 a trade. So yeah, then we can make that thing quick, or even $500 a trade, because that's 2% of the account. So that's the plan, guys, for next week. But let's get into the charts. I hope that everybody's going to enjoy the weekend. I'm about to go hit a gym session after rendering this video and putting it out on YouTube, and then I'm just gonna enjoy the weekend, guys. Enjoy the weekend with your family, with your friends. I don't know, there's no alcohol in South Africa, so we can't be doing that. But yeah, stay safe, look after yourself, and let's get into the charts. So let's get into the charts, guys. Let's get into the charts. I just wanted to show you guys Thursday's trade that I did record. Obviously, the second trade that I took, I couldn't record it because it was on my phone.
You can see that we have a 4H key level. You guys do know that I denote my 4H key levels in green. We get a break above this key level. Now, the way this works, guys, with the break above, obviously this is GBP USD, and I've been watching mostly GBP JPY. What you can do is you can enter on this 15-minute candle, place your stops below this 15-minute candle, which is the breakout candle, right? And then you can target this area first and then that area second. Now this would probably be about a 1 to 1.5 or 1 to 2, and then that would be about a 1 to 3. I think it would be about a 1 to 2, right? However, the the other way to do it is to just simply the way I've been doing it is simply just enter on the breakout of that candle and anticipating this to be the wick area, and then price can then continue higher. Now you can see that this one candle gave me break even. What then happened was, let me show you guys what exactly happened after this. The one candle gave me break even and I moved to break even, and as you guys can see that we did get break even. Price moved back onto us, and that's just a shame. It happens. Sorry, it happens. However, what happened after this was the thing that kind of caught my attention. We flew up into this area, and then we broke this area and we flew up into this area too. Now you do have to keep in mind that I think Wednesday and Thursday, sometimes even Tuesday, but I do know Wednesday and Thursday, we do get big moves in the market. We get really, really big moves in the market. Now this week was really great for the market. We had continuous moves from Monday. If you had the right direction, doesn't matter where you entered. If you had safe stop losses, you would have made money, and that's what I'm telling myself. Everybody's trying to get these stop losses correct. Now bear in mind my original stop losses are almost never tapped, which I am telling myself, like, when I do enter this type of trade here, my original stop losses, even on the next trade, I can take you guys to the next trade, which happened yesterday, which was Friday. My original stop losses are almost never tapped, because that's usually what will happen. It will make the wick on on the 15-minute, and not only on the 15-minute, but on the 30-minute too. So the high where my stop loss usually is usually the high on the 30-minute too. So usually this main stop loss will not get hit, and so I can start to actually enter trades like this and take advantage of these bigger moves. However, yeah, your boy, the 0.5%. This got taken out at 0.5%. This was the GBP USD trade that I was telling you guys about. We got taken out at 0.5%. Also, because this is pre-London, the spread is slightly a bit bigger than what it usually is. So this spread right here was about 4 points, I think. So 0.4 pips. And yeah, we got tagged in. We then got taken out. I think this trade right here, so this trade right here was taken on the 15-minute. Same thought processes as this trade, however, just entering on this close. So instead of entering on the the break of the high or the break of the low in that instance, because it's a short, I entered on the close of the 15-minute candle, right? This is New York. Bear in mind, I haven't been watching GBP USD that much in New York, and I don't want to trade GBP USD that much in New York. So what happened here was I took it at the high just because I knew that I was going to be slightly a bit busy at this time. Took it at the low, sorry, placed my stop loss above the high, and I went with $100 stop because I made that $100 the previous day, and I said, okay, let's just risk it for the biscuit, man. Let's risk it for the biscuit. This 15-minute candle ended up closing bullish, and this is where I noticed my mistake. Instead of having a sit and forget, what I need to do is I need to be in front of the charts, because I could have closed this thing at about 0.5% when this candle closed blue, or I could have taken off 50% here, and then this wouldn't have stopped me out at $100. It would possibly stopped me out at 75, but that $25 could help on Monday. Do you know what I mean? So you're always trying to like cut losses short, minimize losses. Or what I could have even done was brought my stop loss completely here. Now this would have probably been $10, $15, but it's not the full amount that you have eventually risk. I mean, if this was, think about it, if this was $4,000 or if this was $1,000 risk, I would rather have taken the $500 loss after this candle closing. Now I did see this wick forming, and then I figured, okay, no. But then what I should have done if I do want to leave it is just set my stop loss above that wick there, because the thought process is uh, this is a lower high in relativity to the previous candle. That's a lower low, lower high, because you can see we didn't take out the previous 15-minute candle's high. And then that's a lower low because you can see we took out that low. So your thought process should be that the next candle, if it is going to go in my direction after taking off 50%, because this candle should have closed bearish, it didn't close bearish, it's in your stop loss range. So now you're closing 50%. What your thought process should be, close 50% and then move your stop loss above the previous candle's wick, because we should respect this last lower high on the downtrend. Okay, why do I say on the downtrend? Because on the 1 minute, on whatever lower time frames it's doing, this is what it's doing, guys. You looking at candles and at wicks completely just as wicks and candles. I'm looking at it as each candle forms a trend. That's the way I'm looking at it. So whenever there's a wick or there's a candle that's lower than the previous candle, that is forming a trend on a different time frame. It's very important to know that, and that's why you can start anticipating or using the previous candle as the previous candle's high or low after a breakout as a stop loss area in the market. Now you must just remember, guys, this is what keeps me saying in trading. Every strategy loses, breakouts loses, break and retest loses, uh order blocks loses, the smart money concepts loses, in inducements, whatever you trade, everything loses. Confluence with fib, everything loses. It's just about how you handle those losses. If you can kind of get used to the losing, because you know that when you win bigger than what you lose. That's the important thing. Like everything, every strategy loses. There's no in forex, if somebody's trying to tell you they have 100% strategy, then that's more likely than not a probably you risking 1% to gain 0.2% or to gain 0.5%. And even with that strategy, they probably do lose, and they can't have 100% winning strategy, because I feel like there's times in the market where price will push down, it will give you your entry signal, and then it will just push up immediately. And there's no, I don't know, unless you the forex god or the forex algorithm, that you know where price is going to. So just stick to your strategy, stick to what you know, and follow the rules completely, so that you know that you you are playing out the numbers, you're playing out the edge completely on your end. Okay. I really thought that was the end of the video, but I forgot that I have to show you guys this. So this is what we are looking like the on the funding talent portal. You can see we are at 1%, and you can see that theory of making higher lows actually worked with having that half a half a stop loss. So that theory does work, guys. That half a stop loss theory does work for your equity curve, and you will, at the end of the day, you will be able to make profit. But like I mentioned, we have the end date is the 29th. Now I don't know if this is like Wednesday going into Thursday when it ends, or is it like actually Thursday? So Thursday evening at 0000. So when we move into Friday, you know what I mean? So I'm the contact support for that. What you can see is we are up $234. Now what I'm going to do is, as I explained to you guys, the plan is to split this $234 into two $100 trades. I'm going to take those two $100 trades. I'm going to buy magic keys this weekend. Take those two $100 trades, probably on GBP, JPY, or GBP USD. And I'm going to see how I can go with it. If I do lose both the trades, I'm just going to simmer for the rest of the week on trading on this account. And then we'll catch the take with $34 in profit. They said as long as you're in profit, you can get a take. So that's what we're gonna be doing. Uh, However, if we do make it big and we do double the account, remember, I'm just going to be splitting those. If I go to 434, I'm going to split it into two, so $200 a trade. Then if we go to 600, I'm going to split it to 300, and that's the fastest way that I can think about actually pushing for this challenge to get to to get to pass this challenge as fast as possible to on Thursday. So if we get to 1,000 and I split it into two $500 trades, boom, bam, bish, mate. Boom, bam, bish. Like that's it. 1 to 2, and we out of here. So yeah, guys, that's the plan. That's what we're looking at for next week. I hope you guys, as I mentioned, have a lovely weekend. I hope you guys look after yourselves. Uh, do something therapeutic. Do something to calm your mind. Take a hike. Do I don't know. Do something just to look after yourself, I guess. So yeah, guys, from your boy Marcelino. Have a wonderful weekend. Have a wonderful day. Peace out.